Hello class. In this video, we cover section 8.2, income tax. I strongly recommend you look at my table note because my table note for income tax includes all the important information and the formulas. For everybody lives in this country, they have to pay income tax. The income tax includes three parts. The first part is the federal income tax. The second part is the FICA tax. And the third part depends on which state you live in, is the state income tax. I should have a word between state tax. I meant state income tax. State income tax. There are a few states that residents do not pay state tax, income tax. For example, Florida, Nevada, and Washington, and Alaska. Majority of the states in America, they have state tax. Oklahoma does have income tax. So how do we calculate the federal income tax for each year? We know we have to file tax every April, right? Next time we file tax is gonna be April 15th, 2024. You file the tax for the calendar year of 2023. So in my table note, I have all the steps are given to calculate your federal income tax. The first step is to find your gross income, all the incomes you have make during the year from the January 1st all the way to December 31st. The second step is to find AGI. Please remember, what does AGI stand for? Very important word. AGI stands for adjusted gross income. Adjusted gross income. AGI is the difference between gross income and adjustments. We subtract adjustments from gross income to have AGI. And here we have a question, what is adjustments? Look at the table right here. Adjustments include the following items and more. Tax-deferred savings account, such as IRA, HSA. IRA stands for Individual Retirement Account. HSA is a Health Savings Account. They are tax-deferred savings account. If you put your money in those accounts, then you do not pay the tax until when you withdraw them, when you get older, in the case of IRA. Student loan interests up to $2,500, those are adjustment as well. Educator expenses up to $250. Alimony payment, self-employment expenses, losses from a disaster, and other items. So those are adjustments. If any of those apply to you, then you are going to subtract those amounts from your gross income to have your AGI. AGI stands for adjusted gross income. Next step, we are going to subtract deduction from AGI to get taxable income. So how much federal income tax you pay depends on your taxable income. We get taxable income by using AGI to minus the maximum of standard deduction and itemized deduction. Yes, we have two deductions. For majority of the people, we choose a standard deduction. Here are the information for 2023. For 2023, the tax is due next April. The standard deduction will increase to $13,850. Okay, by head. If you are the head of the household and this amount is higher, it is $20,800. Let's go back to the table. But some people, their itemized deduction is higher. If the people have a lot charitable contributions or own houses, yeah, look at here. Itemized deductions include the state and the local taxes, home mortgage interest, charitable contributions, medical and dental expenses that exceed 7.5% of AGI, casualty and theft losses, and more. Those are itemized deduction. So everybody, we need to compare. Is the standard deduction higher than itemized deduction or the other way around? We choose the bigger amount and then subtract the bigger amount from AGI to have our taxable income. Once we have the taxable income, we can find the marginal tax rate table and apply those marginal tax rates on top of taxable income. Yeah, this is one of the most important content in this section. We will explain how do we calculate income tax by applying those tax rates on the taxable income. All right. The last step is tax credit. Okay, yeah, the last step, step 5, is to subtract your tax credits from the result of test 4. Yeah, how much tax you should pay, or you should the IRA will refund to you, and you have to subtract the tax credits from that amount to have your final tax return or the owed. The tax you owed to the IRA. IR. What is the word? Individual. IRS. My bad. Sorry. It's very similar with IRA, individual retirement account. IRS services S. Yeah, as I said through example later, we are going to talk about how do we apply the marginal tax rates on the taxable income. That's step 4. The last step is to subtract tax credits. Tax credits is the best thing ever. Yeah. Tax credits include child tax credit up to $2,000 per child under 17-year-old, adoption credit up to $14,300 per adopted child, and energy tax credits, including solar, electronic vehicles, yeah, and more. So tax credits is the best thing. It is a lot better than deduction. So that's some important steps of funding federal income tax. The second part of your total income tax is the FICA tax. FICA stands for Federal Insurance Contributions Act. Those money are used for Social Security and Medicare. And very important thing about the FICA tax, yeah, how to calculate how much money you pay for the FICA tax is the rates, as you see in the table, 7.65%, 1.45%. Those rates are applied directly on the total income, your gross income, yeah, not taxable income. That's the main difference between federal income tax and the FICA tax. All right, as I said, you should take time to look at my table note before and after you go through the information on the guided notes. After this section, we should be able to determine gross income, AGI, taxable income, calculate the federal income tax and the FICA taxes, and solve problems involving working students and taxes. So that's the goal. All right, so I recommend you read those information. Okay, very important, very useful for real world, for your real life. Something I want to point out is tax deferred account, such as tax deferred retirement plan or tax deferred health plan. Those plan is assumed that you make more money when you are younger than after you retire, when you get older. So when you make more money when you are younger, you can put your money in the account, and whatever the money you put in the account, you do not pay tax on the money. But when you are older, when you are retired, then you need to get the money from the account and you're going to consume them, and you're going to pay tax on top of that, because when your income is lower, the tax rate would be lower as well. So that is the assumption that support those tax deferred accounts. And let's look at this example. We take time to look at examples. Angelo earned wages of $63,500, received $1,850 in interest from a savings account, received $15,000 in winnings on a television game show, and contributed $7,800 to a tax-deferred savings plan. He is entitled to a standard deduction of $12,550. The interest on his home mortgage was $6,500. He paid $2,100 in property taxes and $1,855 in state taxes, and he contributed $3,000 to charity. So those are the information about Angelo. We are going to answer the following parts. Part 1, we need to determine Angelo's gross income. Gross income. Gross here means total. All the money you make. All the money you make during the calendar year. So based on the given information, we have his wage. We have his wage, 63,500. And we also have his income from the interest, right? Yeah, that is part of the gross income as well. So add 1850. Received 15,000 winnings on a television game show. That's also need to be included. So 15,000. Okay. And okay, that's all. Yeah. So those sentences give us the information about how much money he makes. Add those three items, we have the gross income for Angelo. You can use your calculator for sure. I'm going to introduce a website. Even you are not using it during the test, but you can use it when you do your homework. It's called Wolfram Alpha. It's just very convenient for me. So I'm going to just copy paste. And they will give you, the website will give me the sum, 80,350. 80,350. Dollars. So that's gross income. Gross income. Gross here doesn't mean disgusting, means total. all the money, total money. Okay, that's part A. Part B. It's supposed to be part B, right? Yeah, part B. Part B, determine his adjusted gross income. Do you remember how do we represent adjusted gross income? It's a very important term in accounting or tax. Adjusted gross income is AGI, and it is the gross income minus adjustments, right? So we have the gross income found in part A, which is $80,350. And we are going to subtract adjustments from the gross income to have the AGI. And what is adjustments? Yeah. And you want to look at my table notes, right? Yeah, adjustments include tax deferred savings account, the money you put in a tax deferred savings account, and your student loan interests, your educator expenses, alimony, self-employment expenses, losses from disaster, and more. Yeah, and based on that, even in my table, I did not include all the items that are counted as adjustments, but to us, those are enough. Those are enough. So read the question. Angelo contributed $7,800 to a tax deferred savings plan. That information tells us the adjustments, right? And this is a deduction. And those mortgage property taxes, those are itemized deduction. We're going to talk about that later. They are not adjustments. There's a difference between adjustments and deduction. And so adjustments, we only have one adjustment for Angelo. That is the contribution to his tax deferred savings plan, $7,800. $7,800. Okay, yeah. So we can do the calculation. Let me get my calculator. $80,350 minus 7,800. 72,350. 72,550. Okay, so that is the AGI. That is the AGI. Okay. Part C, we need to determine the taxable income for Angelo. Taxable income equal to AGI minus, this is my formula, the maximum between itemized deduction and standard deduction. So we want to look at the standard deduction and an itemized deduction for Angelo and determine which one is higher, and we're going to subtract the higher amount from AGI to get the taxable income. All right, standard deduction is given. He is entitled to a standard deduction of $12,550. That is standard deduction. And itemized deduction, yeah, look at my table note. Itemized deduction includes state and local taxes, home mortgage interest, charitable contributions, medical and dental expenses. Yeah, you need those information when you work on your homework in MATLAB Math. Yeah. So does Angelo have any itemized deduction? Let's read the question one more time. Interest on his home mortgage, yeah, 6,500. Let's put that here, 6,500. That is itemized deduction. And also property tax and state taxes, yeah, 2,100, 1855. 2,100, 1855. Oops, 1855. Yeah. So those are standard itemized deduction as well. 2,100 in tax, property tax, and 1855 state taxes. And he contributed 3,000 to charity. That is a standardized deduction as well. So 3,000 charitable contribution. Let's see what do we have. What's the sum of those itemized deduction? I got 13,455, 13,455. Okay, so which one is higher? For Angelo, is the standard deduction higher or the itemized deduction is higher? Is the itemized deduction, right? Yeah. So we are going to use the itemized deduction to compute the taxable income for him. Taxable income would be equal to AGI minus itemized deduction. AGI is 72,550. 72,550. Itemized deduction is 13,455. 13,455. Let's do that. Subtraction. Yeah, we have the AGI in the calculator, right? Yeah, just minus $13,435 and 59.95. 59095. 59095. That is the taxable income. All right. I hope you understand the process of calculating taxable income through this example. I guess the challenging part might be funding adjustments, also determine the standard deduction, itemized deduction, which one we're going to apply, right? Which one we are going to subtract from the AGI to get the taxable income. Whichever higher. The higher the deduction, the lower the taxable income. You want to pay less tax, right? Yeah. So that's this example. It's a good example. It shows you how do we fund gross income, adjusted gross income, taxable income. Okay, yeah, the related formulas right here. A tax table is used to determine how much you owe based on your taxable income. So when we say income tax rate, federal income tax rate, those rates are going to apply on your taxable income, not your gross income, right? So in this part, we mentioned what is tax credits. Tax credits are sums of money that reduce the income tax owed by the full dollar for dollar amount of the credits. Yeah, dollar for dollar, that's the best thing ever. Most people pay part or all of their tax bill during the year. If you're employed, your employer deducts federal taxes through withholdings based on a percentage of your gross pay. If you are self-employed, you pay your tax bill through quarterly estimated taxes is more complicated if you are self-employed. When you file your tax return and you are doing is settling up with the IRS over the amount of taxes you paid during the year versus the federal income tax that you owe. Many people will have paid more during the year than they owe, in which case they receive a tax return or tax refund. Others will not have paid enough and need to send the rest of the amount owed to the IRS by the deadline. And this table gives you the process or procedure of calculating your income tax. I have the same thing in my table note. So when you calculate the tax you owe or the tax that IRS need to refund to you, we need to determine your filing status first. There are in total 4 filing status categories. They are single, married filing separately, married filing jointly, and head of household. Yeah, based on your own situation. If you're single, then you choose single, that category. If you are married, then you have 2 options, either file separately or file jointly. Yeah, in our homework, there are related exam problems, and you can see for some couples, filing separately may save money. And if you are head of household, then you choose the last column. The tax rates in the left column, called marginal tax rates, are assigned to various income ranges called margins. For example, suppose you are single and your taxable income is $25,000, then the singles column of the table shows that you must pay 10% on the first $9,950, which is $995. And you must pay 12% on the remaining $15,050, which is $1,806. So we're going to talk about how do we apply the marginal tax rates on your taxable income in detail through examples, okay? So let's look at this table. As you can see, we have 4 filing status. On the bottom of the table, you have the standard deduction. Exemptions, like years ago, we don't have an exemption anymore. Yeah, only deduction. They cancel the exemption. And yeah, let's find a example to practice. Example here. Calculate the federal income tax owed by a person filing a return as a single whose gross income, adjustments, deductions, and credits are given below in this table. Okay, so let's get started. I need to use the space, so let me do that. Okay, so let's start from the gross income. The gross income is given. Gross income is given, $67,000. And what about AGI? AGI is gross income minus adjustments. And adjustment is given as well, right? Adjustments, $9,000 paid to a tax-deferred IRA, individual retirement account. So AGI for this person is $67,000 minus $9,000. 67 minus 9, that is $58,000. That's AGI. All right, yeah, gross income 67 minus 9,000. We have $58,000. That is the AGI. And then we determine, is this person gonna select or choose standard deduction or itemized deduction. Let's look at the table. Deductions. Okay, so let me write it down. Yeah, standard deduction for this person. How do we find that amount? It is not given. It is given in this table, okay? Tax table on the bottom. Since he is a single, we look at the first column and the last row. Standard deduction is $12,550. $12,550. $12,550. And then we need to calculate his itemized deduction. Okay, yeah, we need to add up those amounts. Yeah, deductions: $7,500 mortgage interest, property taxes, charitable contributions, medical expenses not covered by insurance. Yeah, so we're gonna add those amounts together. We have 7,500 plus 3,200 plus 5,450 plus 1,500. Double check. Be very careful when you calculate those numbers. It never hurts you by double check your answer. Let's see what is the sum. $17,650. 17,650. Okay. That's the standard itemized deduction. Okay, obviously for this person, itemized deduction go beyond standard deduction. So the taxable income would be the AGI minus the itemized deduction. In his case, AGI is 58,000, and minus the itemized deduction. Oops. Minus itemized deduction 17,650. Let's use a calculator. 58,000 minus 17,650. 4350. 4350. Right, that's the taxable income. Taxable income. Now we're going to use this table to calculate the tax he either owed or the IRS is going to refund to him before applying the tax credits. Yeah, the tax credit is the last step. So we are going to do the step 4. Okay, yeah, so let me highlight this amount, taxable income. This amount, taxable income. And let me copy this table one more time, somewhere convenient. How about here? All right. Taxable income. Taxable income. We just found is that amount. All right. Yeah, he's a single, so we are going to select the first column. The first column. Let me highlight the table. So we are not going to look at all those. Yeah, only the first two columns. Only the first two columns. Let me see if I can actually. Yeah, let's just look at it closer. Yeah, so the taxable income of the person is 40,350 dollars. Okay, yeah. How do we know how many which bracket this person is gonna be? Yeah, those are brackets 0 to 99.50. That's the first bracket. Second bracket is 99.51 to 45.25. And the third bracket is 45 to 6. Okay, so now we know this person fall in this bracket. Okay, this bracket, second bracket. Do you see that? His taxable income is $40,350, which is somewhere between 99.51 and 40,525. So we only need to use the first two tax rates. All right. Yeah. Firstly, find the tax bracket the person's taxable income fall in. In this case, it fall the second bracket, second range. And then let's think about the taxable income, those money in dollars, like $40,350. Yeah, you have that many dollars, and you put that many dollars into two buckets. Okay, two buckets. The first bucket, you have the first $99.50. Okay, then how much dollars do you have? How many dollars do you have in the second bucket? In total, you have 40,350. If the first bucket, if you put $9,950 in the first bucket, in the second bucket, do you have 4350 minus 9950? Do you have that amount? Yeah, let's see what is that. I don't have to rush this part. We take time to understand it. So 4350 minus 9950 equals 3,400. So you're gonna have 30,400. Yeah, 30,400 pieces of dollars in the second bucket. Do you see that? Yeah, your taxable income. Now we only consider taxable income is $40,350. And we are going to put those money in two different buckets. And the first bucket we must put in $9,950. Then the rest of the money would go into the second bucket, right? The rest of the money is the difference between 40,350 and 9950. Yeah, we use 4,350 to minus 9950 to have 3,400. So that's how many bucket do you have, all right? So the money in the first bucket, you are going to apply 10% tax rate on it. Yeah, that's what the law says. Yeah, the first $9,950 you make, you pay 10% tax on it. So 10% of those money is tax. And the money in the second bucket, you are going to pay 12% tax. All right. So the formula to find the tax you owed or refunded, actually before tax credit, let's just write income tax, federal income tax, or tax, just say tax in this step. would be equal to 10% multiplied by $9,950 plus 12% multiplied by the rest of your money. How do you get the rest of your money? Your taxable income, 4,350 minus 9,950. Okay, and let's see what's that amount. Copy paste. Yeah, you can do the calculation on your calculator. I'm just using this app website. It is $4,643. Okay, 4643. 4643. $4,643. Yeah, that's the tax. Am I clear about how do we apply tax rates on taxable income to get a tax before applying the tax credits? Yeah, you first have to find the filing status. And secondly, you determine how many buckets do you need, right? Yeah, in this case, because your taxable income fall in the second bracket, we only need 2 buckets. The first bucket has the first $9,950, and the second bucket has the rest of the money. For the money in the first bucket, we apply 10% tax rate. For the money in the second bucket, we apply 12% tax rate. And that's how do we have the income tax, federal income tax. But that's not the whole story. Your income tax owed or refunded will be refunded equal to that amount we just got, 4643 minus your tax credit. Yeah, that's the best thing ever. Yeah, this person has a tax credit, $500. So we're gonna subtract $500 directly from the tax. And we have 4143. Right away, your taxable, your tax reduced by $500, dollar for dollar. And that amount is your tax for that year. Okay? Actually, technically, I should write just the tax owed. Yeah. If you have paid some of them during the course of the calendar year, and you will get a refund. Depends on how much money you pay during the course of the during the year. Yes, this here we should write tax owed. Okay, does that make any sense? Very, very important. So you can imagine that your taxable income goes to different buckets, and different tax rates apply to different buckets. Next question. Actually, we'd like to read this interesting fact. Percents and tax rates. In 1944 and 1945, the highest marginal tax rate in the United States was a staggering 94%. The tax rate on the highest income Americans remained at approximately 90% throughout the 50s, decreased to 70% in the 60s and 70s, and to 50% in the early 80s, before reaching a post-World War II low of 28% in 1998. So that's the history of the tax rate. It's very, very high. Okay, next topic, we are going to talk about the second part of your total income tax, FICA. FICA stands for Federal Insurance Contribution Act, that are used for Social Security and Medicare benefits. Yeah, they have been saying the pool is drying. Social Security provides payments to eligible retirees, people with health problems, eligible dependents of deceased persons, and disabled citizens. Medicare provides health care coverage mostly to Americans 65 and older. This table is a tax rate for FICA. It has 3 columns. If you are self-employed, you only look at the last column. If you are not self-employed, you only need to look at the first column. The second column is how much your employer would pay for your FICA. Yeah, as you can see, if you are self-employed, you pay both. Yeah, 15.3% is twice of 7.65%. Here, 2.9% is twice of 1.45%. If you are self-employed, then you pay as employee. Also, you are your own boss. You have to pay as an employer. But if you are employed by a company or whatever, then you only need to pay half of it, and the other half, your employer is going to pay for it. Let's apply the table by solving this example. If you are not self-employed, okay, if you are not self-employed, I'm going to get this table to the next page, then we can look at the whole thing. If you are not self-employed, okay, then you look at the first column only. The first column only. And you don't have to worry about those. Yeah, only the first column. If you are not self-employed and earned this much money, what is that? That is your gross income, all right? Remember I mentioned earlier the main difference between, calculation-wise, the main difference between funding federal income tax and FICA is you apply the tax rate, federal income tax rate, on your taxable income, but you apply the FICA rate directly on your gross income. So here the gross income is given. We don't have to find an AGI or taxable income. We just need a gross income. What are your FICA taxes? Okay, so your income, your gross income is $180,000, right? Yeah. So the FICA table, tax table, has two rates or two brackets. The first bracket is from $0 to $142,800, and the second bracket is from $142,801 and above. Yeah, any money go beyond that, you pay 1.45%. So you are going to apply both rates because your income is high. So you're going to apply both rates. And we are going to use the bucket to demonstrate that again, okay? So this time, the two buckets going to contain all your gross income. The first bucket is going to have the first $142,800. And the second bucket is the rest of the money. Yeah, we are going to use 180,000 to minus 142,800. Let's see, what is that? $180. 1, 2, 3 minus 142,800. $37,200. $37,200. Yeah, that is the money exceeding the first $142,800, right? Yeah, let me know, am I clear about this or not? It's very, very important. We are going to apply the FICA rate on top of your gross income. So we use the idea of buckets. You need 2 buckets. The first bucket is it has the first $142,800. And the second bucket has the rest of your gross income. And we are going to apply 7.65% this rate on the money in the first bucket, and then 1.45% on the money in the second bucket. All right, so the formula or the expression we are going to have is your FICA. Both of them are capitals. All of them are capitals. FICA is gonna be 7.65% multiplied by $142,800 plus, and then 1.45% multiplied by the rest of your gross income. Yeah, we figured out is a 37,200. But if you don't want to do that separately, you can just use your gross income 180,000. Let me see if I can change the row. Yeah, minus 142,800. Okay, let's see what's the value. When you calculate it manually or using calculator, convert 7.65% as decimal. We talked about this last section, right? And then multiply first, and then add the 2 products together. Yeah, follow the correct order of operations. I'm going to just use the website, get it done quickly. $11,464. 11464. Okay, so that's your FICA tax. That's a lot, right? That's a lot. So this is how do we calculate the FICA. If you are self-employed, then you're going to look at the last column. We have similar related problems in MATLAB Math. Okay, let's see the next topic. This part includes 2 concepts, gross pay and net pay on your pay stub. You should pay attention to your pay stub every month or every bi-week. Yeah, a pay stub attached to your paycheck provides a lot of information about the money you earned, including both your gross pay and your net pay. If your pay is directly deposited into a bank, you most likely have access to an electronic form of your pay stub. Gross pay, also known as base pay, is your salary prior to any withheld taxes for the pay period the check covers. Your gross pay is what you would receive if nothing were deducted. Net pay is the actual amount of your check after taxes have been withheld. When you're looking for a job and they say this, your annual salary is this, how much money? That is your gross pay. Okay? Yeah. Your net pay is going to be a lot less than that after federal income tax, after FICA, after state tax income. Yeah. You should consider that. Let's look at this example. You decide to work part-time at the local gym. The job pays $15 per hour, and you work 20 hours per week. Your employer withholds 10% of your gross pay for federal taxes, 7.65% for FICA, and 3% for state taxes. Okay, what is your weekly gross pay? Yeah, let's calculate under those parts. Weekly gross pay, yeah, before any withheld taxes. You got $15 per hour, and you work 20 hours, okay, times 20 per week, right? Yeah, we are looking for weekly gross pay. So you work 20 hours every week and $15 per hour. So that is $300. $300. That's the first part. Second part, how much is withheld per week for federal taxes? Yeah, we must use the information that is given. You don't create your own conditions. Read the question. Your employer withholds 10% for federal taxes. Yeah, 10% is the percentage you need to apply. So we use 10% to multiply by your weekly gross income, gross pay, $300. So the money withheld for federal income tax is gonna be $30. 10% of it, right? And part C, how much is withheld per week for FICA? Yeah, read the information again. 7.65% for FICA. Okay, then we do 7.65% multiplied by what? By $300. Okay, yeah. So all those percentage gonna be applied on top of your gross pay, $300, weekly pay, $300. So that is, yeah, let's do the calculation here. 7.65%, that is 0.0765. Multiply that by 300. 22.95. 22.95. $22.95. Okay? Yeah, that's how much money your employer will withhold for the FICA. And you don't have that much money to spend, by the way. And part D, 1, 2, 3. Part D, how much is withheld per week for state taxes? State tax is 3%. Yeah. Again, that 3% is gonna be applied on top of your gross pay. Yeah. All the whole. Yeah, we do part equals percent times whole, right? Is $300. Is your weekly gross pay. And that is $9. $9. That's your state income tax. Part E. What is your weekly net pay? Okay, net pay. Yeah, the money the amount you're gonna use for budgeting everything. Yeah, how much rent you have to pay for grocery, everything, entertainment. Yeah, you only have net pay to spend. You don't have the gross pay to spend. So let's see what's your net pay. From $300, we are going to subtract the federal tax, 30, the FICA, $22.95, okay? So 22.95, yeah. And then subtract state tax $9. Let's see what's that. $238.05. 238.05. Net pay. Yeah, you don't have $300, you only have $238. What percentage of your gross pay is withheld for taxes? What percentage of your gross pay is withheld for taxes? Rounded to the nearest tenth of a percent. What percentage of your gross pay is withheld for tax? All the three parts of the income tax. Then that's gonna be 10% plus 7.65%, 10% plus 7.65% plus 3%. What percentage of your gross pay is withheld for taxes? And just add them up. And that is 13, that is 20, 20, 65. 20.65%. Round to the nearest tenth of a percent. Tenths. Then we're gonna have to round it. $20.7. Rounded to the nearest tenth, that is keep one decimal places. Rounded up 7%. Okay. Yeah, well, we also can find that percentage by doing this. Gross pay 300 minus net pay 238.05, and that's the tax you pay in total, right? And divide that by your gross income 300. Same thing, right? 20.65%. Yeah, rounded to the nearest tenth, 20.7%. Same thing. What percentage of your gross pay is withheld for taxes? Round to the nearest tenth of percent. Yeah, more than 20%, like 21%, more than 20% goes to the government. Different type of governments. Means you only have a shy 80%, right? You only have a shy 80% of the gross income to spend. The last part of the guided notes are some formulas and the concepts, vocabularies. Yeah, please spend time to read the guided notes, my table notes, and understand those examples. Very important. How do we apply the table, tax table? Apply different rate on top of your on top of your taxable income to find the federal income tax. And how do you apply the FICA rate on your gross income to find the FICA tax? If you have any questions, please feel free to email me. I'll see you next video.